This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So what I wanted to do today was I'm going to show you a specific trade pattern that I haven't talked about in quite a while, but it showed up in the S&P on Friday and on an intraday basis. And I thought it would be worthwhile to show kind of how I handled a trade. I had a little time, so I put a trade on. In fact, I had two in there. I'll show you both. And kind of how I would go about thinking about this and why this is such a powerful tool, this specific setup to be on the lookout for. So let's go ahead and get into this. So I've got a 10-minute on the left and a 2-minute on the right. For all intents and purposes, as always, you could be looking at a weekly and a daily, either way. But what happened here is we had this big gap down. You see this massive gap that took place to the downside, and you kind of set the stage right off the open. You see how the opening price was basically the low, and we never went back down and tested that or even went down to a new low, and we finished off that bar at green to the upside. And I talk about this in the course, looking at that bar. That's a bull bar. I mean, there's 3 or 4 things that I'm looking at based on how far away you are from the short-term moving average. If you go through the course, you know midpoint is very important, especially on a wide range bar. So little things, there's about 3 or 4 things we want to be watching on each bar. So the main thing, though, I'm looking at is the low of the bar, and the low of the day is here. So we get this run to the upside, and then it pulls back and it's walking along. You see how this is kind of walking along the 18. And at this point, we were still below the MACD zero line, and it almost looked like it wanted to roll back down. So I went ahead and did this opposing trend pattern. You see how this is an opposing trend? And I got in pretty early, like right here, looking for a move. Now, I was looking for a play down to 404, which was the 18 on the higher time frame. I don't want to bring that up because I want to save time here. But right around 404 was my target for this play because that was the 18 on the hourly. Now, again, if you look at what the hourly did, you have this gap down and then a big move up, and then it kind of went sideways. Now, so what I ended up doing was when this came down, I took profits a little bit better than it was better than 1-to-1. I was maybe 1.5-to-1. I took some off just because it was dropping so fast. And then again, I had my target down here, and I just didn't like the way this big green bar was taking place. So I ended up cutting this somewhere along the way. I didn't make very much money on the back half of the trade, but I did half on the way down and then half on the way back up. I didn't cut it into thirds. Now, what happened after this, you see this big green bar kind of caught my eye. I mean, that's a big green bar. So I started looking at what was really taking place, and I'm like, oh, I see what's happening here. We have our old spike and ledge forming, okay? Now, if you can't see that looking at this, here's what I want you to do. I want every now and again, and I talked about this week, is have your zigzag nearby so you can put it on. I mean, if you look at this is so blatant, spike and ledge. Do you see that, how that formed? And we know that the ledge, a lot of times it'll be this high, but when I see it forming like this, I'm looking at this peak here as being pretty important. Now, I have to tell you, so you have this spike and ledge forming, and then look at the way the 2-minute chart formed. You see this beautiful cupping pattern? I mean, obviously we had this hard down move, but we were really just testing the low at that point. And then we continued to cup around. MACD improved again, came back, made kind of a double bottom here, and we had a low ADX condition. So, I mean, I started to see this real low ADX condition take place, and I was looking to play a breakout. And so when this got through here, I got long. Now, the stop went right underneath here. And I'm just going to give you ballpark numbers, but I was risking right around 50 cents. And I put a limit order, again, right up against these highs, right around 406, because that was 1-to-1. And I had a limit order up at the break even. So for the day, the S&P, I think it was right around 407 and change or something like that, was where it would come back to even for the day. Okay, and so that would have been filling this gap. So I wanted to come just underneath that. I think I put the limit order in right about here. But you got to realize I was only risking 50 cents, and we're talking about, even if I'm in at 405.50 up to 407, that's 3 times what I risked in the trade. And I had gone at 1-to-1, and I was really playing for a big move on the second half. Now, what ended up happening is this ended up having a couple really big bars, and it got me a little uncomfortable, and we formed a tail here, and then I was thinking it was going to go, and then when it tried to take out the tail and kind of reverse back down, I got out right about in here. So I took a 2-to-1 at this point on what was left. And then I still had my order up here to take the last. Now, yes, I could have just kept trailing the stop, and I'd still be in this trade right now. And yeah, that could be the case, but I'm constantly getting calls and interruptions and stuff. So I tend to just take big expansion bars. I mean, look at the size of this huge bar right here. I mean, that's just a huge, huge bar. So I was happy to be out at that point. You never know how this is going to play out, but you want to be on the lookout for these patterns where you spike to the downside and then form this ledge. Now, I mean, obviously, I was talking about this 400 number on Friday being so important, so I thought it was really bullish that this held above that line and then pushed up for the day, and this thing just keeps going. I mean, we've turned positive now. And look at the momentum on the 2-minute chart. We got green DI showing up here. So yeah, I could have trailed this. And if you have time to trail it, that would be what I'd recommend. We still haven't taken out a single bar's low, even though this divergence showed up. Do you see the divergence? So once that showed up on this big green bar, I had to stop down here. And it just went and took me out, my limit order. But what I would do is trail this, especially if you've already taken some profits. If you have the time and you don't want to just exit, trail each one of these bars until it gets stopped out. And for all I know, this is going to just go straight into the close. I don't know. You never know how these are going to play out. But just use good overall setups, and then once you have that, have your plan in place as to how you want to handle the trade management. All right, so hopefully this was a useful video, but I do want to make mention of this pattern, this spike and ledge. Okay, I talk about that again. It's one of the things I go into in my special patterns section of the course, and I think if you know what's going on here, right? I mean, if you see that price pattern developing, then I think it makes it a lot easier to see what the trigger would be. You have a low ADX pattern. It's really back-to-back low ADXs, but when I know I have this pattern, it gives me a lot more confidence to want to take it. All right? So anyway, go ahead and post any questions or comments, and we'll see you next time.